Hey everybody, welcome back to my YouTube channel. I'd like to start off this video by showing you the inside of my GFT dashboard. GFT, of course, being Goat Funded Trader, which is the firm that this video topic is about. So I recently passed a $50,000 GFT challenge. Phase 1, Phase 2, and I have now been trading the live 50K account for some time now. I've already received a payout, and I wanted to show you my history in the current live account, and I'm also going to show you my past accounts, including the challenge. So let's take a look at my current account. As you can see, $50,000 active with GFT. My current equity is just under 52,000. Balance is just under 51.5. I've already received a payout here, which is quite nice. As you can see, all my statistics are here, and this is my trade summary. The two trades that we're going to be talking about mostly today are the ones prior to my withdrawal. So my first trade on this account was actually a loss of just over $850 on Euro USD. And then I had a trade on NZD USD and Euro USD, both netting just over $1,500. So calculate those with the loss, and I had about 4% as a payout, which was quite nice. So today we're going to be talking about the Euro USD loss and the Euro USD win. The Euro USD win is pretty much identical to the NZD win, so we're not going to go over both of them. It would just be redundant. But after these three trades right here, I requested a payout. I guess it doesn't show that here, but I did request a payout right after that. I will show proof on the screen as well that I received that payout from GFT, and I have been trading in the account since, and I'm currently in floating profit in an existing trade. And that's why there's a difference between the equity and the balance right now. Now, one thing I'd like to mention here before we move on to the charts is that I actually have a few accounts here. Obviously, there's phase 1 and phase 2 of the challenge. This account number 4, this was a technical issue. They gave me a 25K instead of a 50K. They quickly corrected it. Very good customer service here at GFT. So that was just a technical issue. But I want to start out with account 1 actually, because I first failed this challenge. I took the 50K and unfortunately I failed it. There's of course no time limit, but I wasn't profitable enough. I wasn't profitable enough with this account, and I ended up losing this challenge. Now, phase 1 of the account right here, and phase 2 right here. So without further ado, let's head over to TradingView, and we're going to break down the trades that I took and the strategy that I use to pass the phase 1, the phase 2, and am now trading live. And just received my withdrawal. So let's head over to TradingView. All right, everybody. So these are the two trades that I really wanted to talk about most. Now, I obviously, as you can see, took a loss first, and then there was a very profitable trade here on Euro USD on the 4-hour time frame. I'm going to put up my account history on the screen as well, because you'll see that there was also an NZD USD trade. But I'm not really going to go over that because although it was profitable, it was pretty much identical to this Euro USD win. The main thing I want to talk about is the loss and the win here. Because NZD USD is pretty much identical to this one. So let's start off with all the way to the left here where I took this loss. So in my opinion, this is a very valid loss because it fit my trading plan to a T. To me, this was an A+ setup. So let's take a look here. We can see a very corrective movement to the upside. That's exactly what I like to see because that tells me that it's not really an uptrend. It's going to be very short-lived most likely. And that's exactly what happened here. So after price took liquidity from these highs right here, continued trickling up a little bit higher, but then very abruptly dumped to the downside, right? Now, when that happens, it typically leaves behind a gap, or what's known as imbalance, or a fair value gap. This is the main confluence that I use to trade. So as soon as I see that big displacement here with imbalance and a break of structure to the downside, right? These were the lows previously, and it broke through all of these lows down here. This one bearish impulsive move broke through multiple structural points. Okay, so pretty clear direction. The market showed its intention, in my opinion, and that prompted me to look for a selling opportunity. So what I do at that point is I wait for the low to be solidified in a selling situation, of course. I wait for the low to be solidified, and to do that, I need to see price retracing back to the upside. As soon as we start retracing back to the upside, that's when I can draw my fib tool from swing high to swing low and identify the premium prices that I would like to sell at. So as many of you should know by now, my Fibonacci tool is only set to the 71 and the 79% retracement levels. That's where I like to enter trades because it's extreme discount or extreme premium pricing. and it provides very favorable risk-reward ratios, and it's a very simple and repeatable process. The stop loss is placed at the swing high, the take profit is placed at the swing low, or vice versa if you're buying, of course. Many of you regularly ask me how I stay on top of economic news events. Well, I study news events using the economic calendar from Fastbull. This is one of the most accurate and detailed calendars I've ever used, which allows me to stay on top of all current and upcoming events that could possibly impact my trading. Right from the Fastbull website, you can quickly access expert analysis of currencies and global events. You can also view a list of the most current and up-to-date news events happening around the world that could have an impact on your trading. Whenever I'm considering setting an order for a new trade, I first cross-reference my technical bias with the fundamental analysis that I perform on Fastbull. This ensures that I have the best quality trades and the highest probability of being on the right side of the market. If you'd like to try Fastbull for yourself today, simply click the link in the description of the video below. So in this case, I set my order at the 71% retracement level, got triggered in. There was quite a bit of drawdown because we actually pushed past the 79% and filled the majority of this imbalance here on this bearish candle. And then we started rejecting from this area and pushing into what was profit for me. So I think it reached approximately 1R in profit, but then came right back up to the entry, started consolidating. That's really not a good sign. When I enter a trade, I like to see clear momentum and clear direction. If my order is triggered and I see consolidation, price moving sideways, that's typically not a good sign. I lose my confidence in the trade when that happens. But of course, I still let the trade play out, because if I was comfortable with the risk in the first place, I should be comfortable to watch the trade either hit the stop loss or take profit. So I let it go just to see what would happen, and price pushed right into my take profit. My stop loss actually. So unfortunate outcome, but when I look back on this trade, I can't be upset about it. Obviously, we all want to win as much as possible, but losses are part of the game. That's just like, it's pay to play, right? You can't have a 100% win rate strategy. Nobody does. And if they claim to, they're lying, right? So this one I had to take on the chin because it perfectly fit my trading plan. We saw liquidity purges to the left. We saw a clear break of structure, clear intention in the market. Price left behind a significant imbalance. And I patiently waited for price to correctively make it up to my retracement levels. And that's where I entered short. So the fact that price went against me, again, I have to take it on the chin. To me, it's a valid loss for an A+ setup. So moving on. Now, this is interesting because we saw the exact same model here, which I'll go over in a second, but this ended up being a win. So the takeaway from this basically is that trading is just about probabilities. You can't win all the time. So what you need to do is have a set trading plan with, one or two, maybe three certain setups that you like to trade, and just continuously execute on those setups as they present themselves. Some of them will be losses, some of them will be wins, but if your risk management and your risk reward ratios are healthy, then over the long run, you will be quite profitable. For example, if you're risking 1% per trade, right? This would be a 1% loss, and then this would be a 2.45% gain. So obviously you made up for that loss. I could have taken a loss prior to that as well, and this still would have made up for both of them, and then had some profit in my account. I just wanted to nail that point home, that trading is about probabilities. So don't be afraid to lose, but don't be taking losses on stupid trades that don't fit your plan. Like this loss, the first one here on Euro USD, this fit my plan, so it's a valid loss. If I went against my trading rules and traded some stupid setup that I'm not typically trading, then this loss would have hurt, because it would have been a realization that I'm not following my rules and that I'm not as disciplined as I should be. But because this was perfectly fitting my plan, it's a valid loss and I have to take it on the chin. So moving on, we actually see the exact same setup occur. So I'm actually going to hide this for a second so we can really focus on what recently happened. I'm going to hide all the annotations that I previously had. So we saw the exact same setup occur. We saw liquidity from this high, right? Buy side liquidity from that high get purged. And the reason I can identify that as a liquidity grab is because we broke structure right afterwards. So in the moment, let me use the replay tool here. The moment that this was occurring, it obviously doesn't look like a liquidity grab. It would look like a break of structure. This is where a lot of people get confused, right? How do you identify liquidity grabs? Well, I'm about to explain it. So in the moment, as these bullish candles are forming, this would look like a clear break of structure, right? But as we play price forward and then structure is violated to the downside, that means that liquidity was purged from these highs and the market is showing its true intention by violating structure to the downside. Okay, so think of this liquidity grab as the market refueling for its next move. Okay, liquidity acts as fuel for the market. So when liquidity is purged, price has all the fuel it needs to move in its intended direction. So I hope that explains liquidity concepts a little bit more. I could obviously go more in depth about that, but that's a very rudimentary way to explain it. And that should provide some clarity. So as soon as we took the highs here and then broke structure to the downside, all I was simply waiting for, similar to the previous setup back here, all I was simply waiting for is price to bottom out and start retracing back to the upside. And then I can draw my Fibonacci tool. So as you can see, price made a low here and then began retracing. So that to me is a solidified low. So that's when I drag my Fibonacci tool from the swing high to the swing low, identify my premium and discount prices. In this case, I'm obviously looking for premium prices because I want to be selling. And I look for those retracement levels to line up with either an order block or imbalance, preferably imbalance. So in this case, we have two significant areas of imbalance that are in and around the 71 and 79% retracement levels. So I typically always set a limit order at the 71%. And in this case, it seems like there's no reason that that wouldn't be tapped into. So that's where I set my limit order. So if I just play price forward, we all saw what happened. But there we go. So in this case, I definitely could have set my entry at the 79, but that's just me saying that in hindsight. Like the reason I set my orders at the 71% to begin with is so I get involved in high quality trades and I'm not constantly missing out on my orders, right? If you're always targeting the 79% or the 88%, for example, if you're really going for those high extremes or low extremes, should I say too, then oftentimes you're going to miss trades. So when you do get involved in trades, they may be very, very profitable, very lucrative positions, but oftentimes you're just going to get your order missed because I've noticed in my testing and in my experience, most importantly, price mitigates the 71 and then takes off. It does not always get to the 79. In this case, of course, we did mitigate both imbalances and actually tap into this candle up here, which is the very extreme zone. And then price absolutely melted to the downside from that point on. I can't really say it's a textbook trade because there was so much drawdown, but overall the technical analysis and the fundamental concepts of my strategy were well respected. So I guess it is somewhat of a textbook trade. I just prefer not to see that much drawdown, but that's part of the game sometimes. So we saw a very clear push to the downside, broke through this low right here, broke through this low right here, left behind imbalance, and then took out the low, which is where my take profit was set. Now, if I play price forward a bit more, there's one more thing I wanted to talk about here. It's regarding take profit placement and stop loss placement. We all know that our stop loss should be placed at a point of invalidation, right? If I'm trading within this bearish range here, from here to here, this is my range. So obviously my point of invalidation would be the high of this range, because if we break out of this range, then my short trade idea is no longer valid. So this high here is the point of invalidation. So that's why I drag my stop loss directly to that high. Now, in terms of take profit, that's where a lot of people mess up. They get very greedy, reaching for 1 to 5 risk reward, 1 to 10 risk reward, etc. In this case, again, I'm only trading within this current 4-hour bearish range here, right? So my take profit, just like my stop loss, should be set at either the swing low or the swing high. So in this case, obviously the swing low, right? This is the range that I'm trading within. So this is the most logical place for me to place my take profit level. And this is a perfect example of why I do that. So a lot of people will, for example, target an opposing imbalance or an opposing order block, you know, maybe the imbalance down here or something, drag their take profit all the way down there. Or people who are very accustomed with Fibonacci, they may, let's see if I have it here. Yeah, they may target an extension level, for example, the -23 or the -27% extension level. Now, sometimes that will work. of course, right? If you get involved early in a strong trend, then of course that will work. But more often than not, it doesn't get there. And so in this case, you can clearly see if I were targeting, for example, that negative 23% Fibonacci extension level, I would have probably been taken out at this trade for break even or a full loss, right? Because it completely reversed. So this is an instance where my directional bias was actually wrong, but I still profited. So I was anticipating the beginning of a downtrend, right? That was clearly not the case. As soon as price took out this low right here, the market reversed very, very impulsively to the upside, and probably ruined a lot of people's trading accounts. So that's just an important lesson on stop loss and take profit placement, because it's important not to be too greedy. Your stop loss as well as your take profit needs to be based on logic, not emotion. You can't just place your take profit somewhere and think like, oh, I'm going to make so much money on this trade. No, your stop loss and your take profit needs to be placed logically so that you can actually exit the market in a reasonable, modest manner, right? So this is where my take profit is always set, at the swing low or the swing high of the range that I'm trading in, and the same goes for the stop loss. So these are the two trades that really resulted in the profit on my GFT account. Let me just put this back. There we go. These are the two main trades. Like I said, there was also NZD USD, which I'll put up on the screen, but it was the exact same as this. So there's really no point in talking about it. These are the two main trade ideas. So I obviously took a loss and then took a win here, as well as a very similar win on NZD USD. And then I was able to withdraw those profits. So I hope you guys enjoyed this video. I really hope that I provided some insight, some value here, some insight into how I trade, how I go about these things. Now, I just want to reiterate, this entire challenge and the profit generated on this account were strictly taken with 4-hour trades. I passed phase 1 in about 3 weeks, phase 2 in about another 3 weeks, using only the 4-hour swing strategy. And then I generated this profit here, again, using only the 4-hour swing strategy, literally sticking to just the 4-hour time frame and executing these limit orders. So it's very, very simplistic. In my opinion, it's the perfect strategy for anybody who works a 9-to-5 job or has a busy family life or a busy lifestyle in general. I have the luxury of being a full-time trader, but I don't want to be a full-time trader. I don't want to be stuck at my screen all day being a slave to these charts. So for me, this fits my lifestyle perfectly. To me, there's a lot of longevity in this style of trading, because it will allow me to travel without staring at my charts. It'll allow me to spend time with family without constantly staring at my charts. It's a very passive approach, and it takes very, very little effort to set up these trades, because they do take a long time to set up and then to progress more often than not, right? The typical hold time that I've seen is anywhere from 3 to 5 days. It's a little bit slower paced. It's not the same as trading on lower time frames. And because of that, it allows for much more freedom. So if this resonates with you, I would appreciate if you like the video, subscribe to the channel for more content just like this. And if you haven't already, go back to my channel and watch the 4-hour swing trading strategy video, because I think it's very valuable and I think it can really change people's lives. So thank you all for watching. I appreciate every single one of you, and I will talk to you all soon.